Boeing crashed and what it means for American industry. In 2025, two Boeing 737 MAX crashes star. Within 3 months, 346 lives were lost. An $80 billion reckoning followed. The dream of flight became a nightmare. How did this aviation titan stumble so disastrously? What are the crushing consequences affecting us all and the American economy? Airlines were crippled, travel plans obliterated by cancellations, and investors panicked, threatening savings. Thousands of jobs hung in the balance, a dark cloud now smothering Boeing's once unassailable future. So, how does Boeing intend to claw its way back from this devastating abyss? What hidden strategies are being deployed for a miraculous turnaround? Can America's faith in its aeronautical flagship be salvaged? Stay until the end to witness the unfolding drama behind this unprecedented economic crisis and discover if Boeing possesses the resilience to pull through this existential threat. The giant falls, the domino effect of the 737 MAX tragedy. March 2019 marked a catastrophic turning point for aviation. Two successive, fatal 737 MAX crashes extinguished 346 lives due to a flawed MCAS. American Airlines absorbed a brutal shock as the FAA grounded all 737 MAX, causing air transport upheaval for 20 months. Thousands of flights vanished, shattering passenger plans and sparking intense frustration. Airlines faced millions in losses, preceding Boeing's multi-billion-dollar catastrophe with direct costs exceeding $20 billion. Immense payouts compensated grieving families. Regulatory fury compounded the devastation, with the FAA fining Boeing $2.5 billion. The MAX crisis savagely disrupted 106 customer airlines. The initial 47 carriers faced a Herculean scramble, incurring rental costs and shelving expansions. Storage costs amplified the financial hemorrhage. Airlines compensated passengers as operational costs soared, with direct losses exceeding $1 billion. Boeing's staggering losses surpassed mere red ink, reaching $60 billion in significant indirect costs, eroding finances and tarnishing its image. Its reputation became a monumental challenge. Trust fractured, straining Boeing's airline partnerships and leading to arduous compensation negotiations. The American air transport sector faces a protracted recovery as airlines eye the 737 MAX with apprehension, exploring alternatives and intensifying competition. Reputation erosion is insidious. A devastating cost as shattered passenger confidence fuels widespread reluctance to board the 737 MAX. Airlines launched reassurance campaigns while Boeing's communication faces an uphill battle. The stock market convulsed violently. Investors stampeded. They unleashed a massive sell-off. It was the Boeing shares. The share price cratered. Stock market valuations imploded. Billions of dollars evaporated. They turned into thin air. Prior to the catastrophic crashes, Boeing reigned supreme. It was early March 2019. Its stock price crested. It reached a formidable $446 per share. Its market capitalization was staggering. It was $250 billion plus. Boeing was the undisputed titan. It was the bedrock of industrial might. It seemed an impregnable investment. The initial October 2018 crash elicited a market tremor. It was surprisingly muted. Investor confidence seemed resilient. It remained stubbornly so, however. The subsequent disaster shattered that illusion. It was horrific. It was March 2019. Fear metastasized. Nations worldwide swiftly banned the 737 MAX. The chilling reality was the Ethiopian Airlines catastrophe. It was March 11, 2019. It triggered a brutal plunge. It was 13% in a single day. Boeing's stock suffered. Market capitalization hemorrhaged. It was a colossal $27 billion. Investor faith evaporated. Analysts were confronted. The situation had undeniable gravity. They aggressively slashed their future forecasts. The downward momentum proved relentless. The December 2019 bombshell arrived. It was the announcement of the 737 MAX production halt. It delivered another savage blow. It gutted the stock market valuation. It was by an additional $11 billion. It happened in a mere 48 hours. Investors now grappled. They faced the chilling specter. It was of Boeing's precarious future. The eventual recertification occurred. It was November 2020. It offered only a spark of hope. It was fleeting and fragile. Deep-seated production nightmares continued. They haunted the company. They suffocated any meaningful recovery. Demand stubbornly languished. Competition soars. Boeing's double disaster. Boeing's production engines sputtered out. Before crashes, 737 MAX was king. Peak output. 52 planes monthly from Everett. A huge US supplier network fueled this. Twin tragedies really hit hard and paused production. For months now, getting back on track is a slow process, but Boeing is aiming for 38 MAX. Each month, a cancellation wave hit. 876 orders vanished. 2019, 2020, airline confidence crashed. Billions in contracts gone. Paralysis meant brutal job losses. Boeing cut global workforce by 10%. 17,000 skilled workers gone. Shock waves through Boeing's network. Over 600 US subcontractors faced hardship. it. They relied on Boeing orders, layoffs cascaded, revenues plummeted, bankruptcy loomed, especially for small firms. Production recovery painstaking, crawled under FAA watch, new safety steps slow. 2024 output, just 348 aircraft. Pre-crisis output, much higher. 279 net orders in 2024 hinted at demand. Boeing's industrial system suffered badly. Restructuring required retraining and new methods. Returning to normal production was tough. Local communities relying on Boeing jobs faced serious economic trouble. Before the 737 MAX crisis, Boeing was a global leader. In 2014, it had record sales, but Airbus, its main rival, was growing fast. Boeing cut costs to compete, which hurt quality. The market fight was fierce. Boeing once held over 50% market share. By 2018, it was neck and neck with Airbus. They dominated. Boeing's 737 rivaled Airbus, a 320, but tragedies changed everything. The MAX grounding gave Airbus an edge. Airlines lost trust in Boeing. Airbus expanded its share. In 2019, Boeing's deliveries lagged behind Airbus for the first time in years. Its market share fell, Airbus became the top manufacturer. In 2020, Boeing saw strongly negative net orders. It hasn't recovered. By 2024, Boeing's deliveries dropped to 333, while Airbus reached 766. Boeing's market share sank to a risky 30%. Airbus is now the world leader. US government intervention, assertive oversight, and the shadow of support. Following the catastrophic 7-1, L, 4-5, L, 37 MAX tragedies, the US government responded with assertive oversight. The FAA's piercing investigation exposed critical regulatory failures and Boeing's flawed certification process, including its prior oversight. Forceful congressional inquiry scrutinized Boeing executives and FAA officials, revealing deep deficiencies in Boeing's safety culture and its ties with regulators. The DOJ's criminal investigation resulted in Boeing's $2.5 billion settlement in 2021 for concealing vital information about the lethal MCAS system. Subsequently, the US government amplified its surveillance of Boeing and the entire aircraft certification process. The FAA implemented ironclad new procedures, demanding radical transparency and enforcing relentless audits to ensure full implementation of mandated corrective actions. Intense political debates ignited concerning aeronautical sector regulation. While some fiercely advocated for stricter government control, others stressed bolstering American industry, acknowledging Boeing's role as a major employer and economic linchpin. The Boeing crisis delivered a tangible blow to the US economy, triggering an estimated 0.5% GDP drop in 2019. The US government now confronts the conflicting dual mandate of unyielding flight safety and safeguarding the domestic aeronautics industry. Striking this delicate equilibrium remains a persistent challenge, starkly illuminated by the 737 MAX debacle. The future of regulation is now a battleground of ideas, with bold reform proposals aiming to fortify the FAA's independence, revolutionize certification transparency, and impose for accountability upon aircraft manufacturers. Boeing faces an uncertain future. It requires a forceful restoration of shattered trust. Strategic investments are in motion. Financial recalibration is underway. Significant hurdles remain. The certification is crucial. It involves the 777 jumbo jet. Deep-seated production flaws exist. They were exposed by damning audits. This mandates comprehensive retraining. Procedural overhauls are needed. A pervasive quality culture shift is required. This is a multi-year undertaking. Boeing is striving to return to financial profitability. It is aiming to raise $25 billion on the stock market. It is also seeking a $10 billion bank injection. The aim is to tackle the company's massive indebtedness. Part of this $10.6 billion, some will come from Tomo Bravo. It concerns its air navigation division. A radical overhaul of production is underway. It is streamlining its vast network. It is strengthening assembly processes. The aim is to increase efficiency. The aim is to raise quality standards. Turnaround scenarios exist. They are fueled by robust global aircraft demand. Boeing has inherent technical capabilities. A return to profitability is a tangible prospect. It is not immediate. Boeing's future hinges on profound transformation. This includes a resolute commitment to safety and quality. Aggressive innovation is key. The arduous reclamation of trust is essential. The path ahead is challenging. It demands significant time. Unwavering dedication is necessary. However, this industrial giant has latent potential. It can achieve a powerful resurgence. This is contingent on its ability. It needs to execute these critical changes effectively. The global aviation industry watches intently. Boeing navigates this complex chapter. It is crucial. Economic reckoning. Can Boeing rise from tragedy? The $80 billion 737 MAX catastrophe triggered a profound economic crisis, crippling airlines, devastating investors, and tarnishing Boeing's reputation. Deep errors demand harsh lessons. Unwavering safety and uncompromising quality are paramount for rebuilding shattered trust. Boeing's turnaround involves strategic actions, like new certifications certifications and production recovery. Yet, its future remains uncertain, demanding vigilant scrutiny from government, investors, and passengers. This crisis underscores the critical need for rigorous investment analysis assessing operational, reputational, regulatory, and governance risks. Alongside company resilience, the 737 MAX debacle highlights the fundamental importance of safety, quality, transparency, a robust corporate culture, proactive risk management, and learning from past failures for building sustainable businesses.